back up. What that is volatility.
You want to invest your money and grow your wealth. How do you invest intelligently?
But you got to anticipate what's going to happen with the market. And that's what we give you. Information so you can anticipate in advance what the market's going to do, so you know what stocks to buy, you know what stocks to short. It's all about having good information and anticipation. You got to anticipate. The one thing you can't do is rely on your brokers. Listen.
Our responsibility begins and ends with our partners and our shareholders, and that's it.
What are you, nuts? Partners and shareholders? You're not included.
Check out the free 10-day trial and follow Phil to investing success. Learn more at philsgang.com. philsgang.com.
Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
Bye.
Money's coming to me.
The chart.
Money's coming to me. Money's coming to me.
Oh, quite a week, quite a year just started. And we had, again, on Sunday, we get this big surprise about Venezuela. Monday, we're being told, and it's true, anytime you get a geopolitical issue, just look at history, the first thing that fails is the tech stocks. Fear comes in. And everyone starts running to gold or silver or the dollar for safety. So what happened was they ignored the Venezuela geopolitical issue. And why would they do that when historically tech stocks drop? Because they were all excited. They reached back and grabbed onto December 17th Micron Technology earnings. And they pointed and said, look at this, they're up 275% for the year. Micro's doing fantastic. Look at the earnings. So that's what they grabbed onto. They said, this is much greater. I mean, there was a huge blowout with Micron. Now that was December 17th. We're in January now. But what's interesting, though, if you go back before that, November, December, all the talk about AI was very negative. Oracle is what set it off. Their earnings, they missed. And all this nervousness about the expense, the money that's being invested, that changed in 2 weeks, 3 weeks. I said, don't worry about that anymore. No, we're only kidding. Don't worry about that. Because one stock, Micron Technology, which is a chip maker, and that's where the money is, in making the chips. And when they blew those numbers out, that was enough that they could say, this is it. Just like what happened in 2000, in 2001, same thing. And all of a sudden, it's different this time. Stocks will never come down again. The market will never come down again as long as we have Micron Technology leading AI. But don't be fooled. The same concerns are today as they were back in November and December on Oracle and the other tech stocks. So the idea when you're trading stocks, of course, you always follow the money. I teach that to my students every day. Follow the money. Follow the money. Don't follow the noise. Follow the money. And money started to pour in yesterday, continuing today, into the semiconductors. Micron Technology leading. Because the party, they think, is just not over. But we are seeing cracks in the bubble. And who's leading this chase? Who's leading this? Who's pushing it? Not the institutions, not the big money. We go right back to who's pushing the move, and the AI, the handful of AI tech stocks, is again the tourist investor, the FOMOs, Now, everybody says, well, who's the tourist investor? Tourist investor is very simple. It's a person who, he's a gambler at heart. He doesn't want to learn anything. He's the one that goes running around. You got a hot tip? You got a hot tip? Is there a stock tip? What do you say? What Kramer said? You give me a hot tip? What this guy say? And retail investors overall lose 93% of the time, but it still doesn't discourage them. So that's the tourist. The investor, retail investor, he wants to learn. He wants to learn. He knows that you can't make money in the market by buying to perfection. In other words, if you don't learn how to sell short, every stock you get involved with on the buy side, you got to trade to perfection. It's impossible. That's why 93% of people lose money. So let's go back to, again, if you go back to November, you go back to December, we had big drops in the AI stocks, big drops. And now it's like all forgiven. Earnings. And that's another thing about earnings. I was talking about that this morning with my traders. I said, look, how many times have you ever sat back and heard somebody say, well, almost every day, like Kramer or any jibber jabber on one of these TV financial shows, the suits come out and they'll say, oh my God, this company, solid earnings, what a great year. Bye. And what do you think of when you hear, folks, this company, wow, what a year. Great year, solid earnings. The emotions, I better get in and buy that stock before it goes up higher. Well, that's a huge mistake. Remember that. That's another reason why so many people lose money in the stock market, because they relate the earnings to a percentage of the stocks going up. So when they hear great earnings, solid, they always use the term solid earnings. When they hear that term solid earnings and a great year, a great month or whatever, it's automatically in the brain is, wow, a lot of people are buying the stock because it's going up big. I better jump in before it doesn't go up anymore. That's not what it's about. When they refer to earnings, they say great earnings. It's not about the stock moving higher. In fact, they have said on many stocks, many occasions, wow, look at this stock. What a great year. Solid earnings. And the stock's not moving, hasn't gone anywhere. And people are wondering, how come I'm not making money if it's such a great stock? Because the translation for Wall Street, this is a little trick they pull on you. They want you to think that. They want you to think that when they use that term, solid earnings, okay, great year, or great day, or great month. But the term solid earnings is a percentage move. It's not a percentage move. So always remember that. So a lot of that is going on now, where people are starting to jump right back into these stocks, because all we're hearing about when they went back to December 17th and moved back, they said, look at the earnings. Look how powerful this stock is. It's just going to keep going up. It is a powerful stock, there's no question about it. But remember, Wall Street, the indexes are weighted. What's that mean? Just when you have just 10 stocks, right? The S&P's going up 17%. 60%, okay, of that 17% is just a handful of stocks. 10 out of 500. Isn't that amazing? Just 10 out of 500 is pushing those stocks up. So, but people don't think about that. They don't think about that at all. So when you had that's really weak breath. But nobody cares, because they'll still jump right back in because they're thinking, the stock's got to go up because it has great earnings. No, great earnings is only about, they'll brag about a stock the more times, again, that they have these the expectations. Everything's about expectations. We keep giving you these, remember, stocks, they always set up stocks with this expectation. They always beat 80% of the time, because the analyst, remember, works for the company. And they'll always take, before the earnings come out, they'll take the expectation and really drop it. Let's say the stock is going to go up 20%. They'll say, well, the stock's only going to go up 5%. And then the earnings are going to go up, 20%. And what happens is, and everybody's thinking, I'm sorry, the stock's going up 5%. All of a sudden it comes out and it goes up 20%. People are stunned. Wow, look at this. So that's what drives the stock, not the percentage, okay? Because of the overweighting with 10 stocks that are trillion-dollar companies that drag everybody along. Like everybody's grabbing on, somebody's grabbing on, they're drowning. It masks the terrible stocks. I mean, when you look at the other 490 stocks, they're not pretty, not at all. So anyway, so that's what happened. So now we turn to page in January, and no more concern. There's no more concern about the these stocks anymore. The semiconductors, the chips, they're just going to be forever. It's going to be different. That's when you got to start thinking. We've been in these chip stocks for a long time, like especially Micron Technology. And I told my Phil's gang members, I said, look, we got to sell into these stocks. What a great week when we opened up on Monday and all these stocks jumped up. Even industrial stocks like Caterpillar and FedEx. That's when you jump in and take your profits. But you have the FOMOs buying right at the top. It wakes up in the morning, stock's up, say $100, and then it shoots right up to 125, and then it goes up to 130. They buy right there at the peak. And if you notice, every one of these stocks that went up on Monday morning, they pulled back. And take the oil stocks. Oil stocks pulled back big. Look what's going on with oil today. And here's what the deal with oil. Oil, when this Venezuela deal hit, everyone thought oil would go down because now that we are controlling Venezuela, we're controlling their oil. And they got massive amount of oil, huge reservoirs of oil. So we're going to be flooded in oil, so oil prices should go down. But that morning, they're saying, no, okay, oil prices are going to go up because, again, they can't get Venezuela online for a couple years. And I said to my members, I said, I thought about that overnight too, and I said, this doesn't make any sense. You would think that oil would be going the other way, be going down, because there'd be more of it. And that's the thing that's important to notice. When you have these big moments, these big announcements like Monday, the smart money, the big institution, they're not FOMOs. They don't have that emotion. They don't have that fear of missing out. They're smart. They sit back for a couple of days and let things sort themselves out. How many times have we had rallies of 800, 900, 700? And within 3-4 weeks, they're all gone. They're gone. And so I'm not saying it's going to happen again, but that's the history behind it, because the fears that we have, in this bubble, AI bubble, are solid. And the fact that we have companies, like these oil companies right now, today they're all, everybody who bought those stocks and chased them yesterday, they're getting wiped out today. Oil's tanking, going right back. There's so much emotion into this. It's amazing. And again, the big emotion always gets you by saying again, wow, solid earnings. And everybody's thinking, wow, I better get going because this stock is going up so fast, percent-wise, I better get in now and buy. No, earnings has nothing to do with it. It's all about, it's really, it's Wall Street's, out in front, big lie. They don't hide it. It's out in front. And it's not really a lie, but because they don't, it is in a way because they don't explain to people the index, how it's measured. It's by weight. So if you got 10 stocks holding the whole market up, and you got 10 stocks with this kind of weight, these trillion-dollar companies, they got to explain to the folks, look at all these other stocks that are dragging along with you. Be careful. Because, again, when they tell you these earnings they're strong. They're not. They're not strong at all. Strong by, are you kidding me? By earnings, beating earnings estimates. So I want to go back to the oil. So oil again has pulled back. Banks were supposed to collapse because when oil goes up, you have a problem with banks because banks have a problem because higher oil means higher gasoline prices. And when you have higher gasoline prices, that means disposable income, the money you have left after you get your check, pay taxes, all your stuff, the money you got left is worth less because gasoline's going up. So you're not going to go to stores and buy stuff. You're not going to buy a TV. You're not going to buy discretionary items, and so because there's just not enough money. So banks usually go down. But banks went up because yesterday everybody said, oh, don't worry. And because this has nothing to do with the geopolitical issues. If oil was going up because we have a small pool of oil and there's a big demand, then banks would come down because there'd be inflation. But that's not the case. That's not the case. There's no demand problem here. This is geopolitical. So banks kept going up, and they're going up again today. And we've been in those banks doing well. We'll talk more about this, tech stocks, other stocks when we come back. We'll take a look on the computer.
Want more information
some
on
of the
the
stocks
show?
we're in and how
Go
we're
to
doing.
philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
You want to invest your money and grow your wealth. How do you invest intelligently? Become a Phil's Gang member and receive the training, advice, and software that will take your investing to the next level. Our team is comprised of successful investors, all with proven track records. Phil's Gang software is easy to use, painless to navigate, and tells you exactly when to buy and sell to help maximize profits. Learn about common market mistakes and how to minimize them. Phil's Gang has successfully taught tens of thousands of investors how to navigate the market with confidence. You don't need to be a seasoned investor to benefit from the Phil's Gang platform, no matter what level of investor you are. Phil's Gang strategies for investing are designed to put you on the path to success. Sign up for a 10-day free trial to see our platform in action, avoid market pitfalls, and start winning with Phil's Gang. Learn more at philsgang.com. That's philsgang.com. Welcome back. Learn, invest, and make profits with Phil Grande. Simply go to philsgang.com. Now, here's Phil.
Welcome back. So, I probably killed the issue, talking about what's going on with these earnings. But to me, I think it's important for traders, especially if you're new in this business, to understand the difference because they suck a lot of people in. Now, remember, they can say, well, we don't suck anybody in. We're not fooling anybody. I mean, it's just waiting. If you got 10 stocks that have all the weight, you put it on a scale and it drops, and everything else goes up. Well, that's what's happening. So we're not pulling any tricks. Well, that's a bunch of BS because they don't explain it to people. When all people got to hear, great year, great earnings, and they think percentages are going up. when they're talking really statistically. All right, not about percentages. Listen to this here. This is another thing that amazes me.
I don't think this particular geopolitical action has enough negative after effects at this point to actually upset the market. The market being driven by what looks like pretty good news.
No. Now that's a lie. Look it up yourself. News can only push a stock or an index up less than a third. So when stocks move up, if you look and say, well, what contributes to this stock movement? News, less than a third contribute. It all goes back to, again, beating earning estimates. So that's a bunch of nonsense. Here's another thing that's crazy too.
Even, I mean, with the events over the weekend, that did not hit supply in a way to panic traders. And we've been seeing this behavior for a while now, that geopolitical risk is being kind of set aside, and there's an underestimation of geopolitical risk and its impact on supply.
It's not true. We've been seeing it all through the Ukraine war. It's everywhere. We see it everywhere. So, again, she doesn't know what she's talking about. So, and the other thing, too, you got to remember, we talk about money supply all the time, too. And people think that means when they hear, wow, the money supply is going up, they're thinking, wow, the Fed's having the Treasury printing all this money, we're shoving it into the money supply. No, that's not what's going on. They fool you with that, too. The money supply is driven only by deposits, bank deposits. One of their biggest contributions to money supply, let's turn around and we'll look at our M2 right here. And this is all important stuff you need. This is what we teach every day too at Phil's Gang. Okay, let me see if I can find I think I still have it up here. Yeah, right here. Okay. See, traders think that when the money supply, look at this money supply of late going up here. See that? No. What happens is the biggest contributor to why, if you go back to 2009, right here, when the money supply was at $7 trillion, and then all of a sudden she started to shoot up here by 2020 to almost 15 trillion. People think that's money that's being printed and shoved into the system, into the stock market, into the economy. And that's why people buy stocks and make a mistake, because that's what they think. Oh, I got to be safe because they're putting all this money in the economy. I'm going to be safe in the market. Stocks are going to go. No, that money has nothing to do with that. That money all comes from, about 85% of that money is from deposits by the banks. And that's why they try to cut rates. Okay, because the more they cut rates, the more the banks, okay, can make loans. And the more loans you make, from loans equal deposits. So you're at a closing and the loan's closed, the money's deposited, right? That's the number one deal that brings that up. The other thing that brings up the money supply, okay, is the fact that when they pay Social Security every month, that moves it up. They pay the federal workers, that moves it up. Federal contractors, that moves it up. So again, just like earnings, right? Earnings are solid. No, it's not. Earnings are, yeah, they're solid by way of, again, I have to laugh when I think of this, okay? But expectations, they beat expectations. Boy, that was a hard expectation to beat. So let's go back to, again, as you go into this new year, you also have to remember, when you hear this, the Federal Reserve, talking about how they're using their tools. In other words, the Federal Reserve, what they do is they don't increase the money that's in the system. They speed the money that's already in the system up. And that's important. You got to remember, that's a big difference. They're not, because when people think, boy, they're putting all this money in the stock market, putting all this money in the economy, I'm going to start buying stocks because they have to go up. That's not what they're doing. That's not new money going in. The Fed will use their tools as gasoline, like an accelerant, and we talked about this the other day. And remember, they'll go buy T-bills. They will always put out expectations, more rate cuts, more rate cuts, rate cuts. The repo pool, that's another big thing, okay? Those are the tools in the discount window. Those are the tools they use to think of that. Those tools are gasoline, putting into the system, light it on fire to push the money through quicker. That's what they depend on. So that's important when you're buying and selling stocks, to understand the difference. And again, you have the government. The other thing that's keeping this whole market together, and this market and this economy is in real bad shape, but it doesn't matter to us. I mean, look at let's turn to the chart just to show you for a moment. Not to brag, but let me tell you where we are. Look at our gold. You know how long ago we bought the miners, GDX? We bought the miners all the way back to this area, right in here. Right there, as we bought all these miners. That was all the way back in April of 2024. And every time our Pro 2 color-coded chart, which is different than your chart, it shows that money's coming in. Okay, that there's buying that's going on. And people are buying, as I said, they think that, all this, these earnings are fantastic. No, anyways, that's where we started to buy it. And look at, and we've been in and out, of course. We bought a load of stock right here, had our members get in right here in this beautiful consolidation and breakout. And we've been doing the same thing. When all of a sudden we were rotated back to the banks. Okay, now here's we go look to the banks. Our banks are doing just absolutely great. And that's why the other night, Sunday night, everybody thought the banks were going to get hit because the banks, again, are really sensitive to oil prices. As I said, once oil prices go up, you're really screwed, all right? But our banks have been doing good. Here's JP Morgan, that's been doing good. Our stocks like Citigroup, that's really been doing good. That's going up. All our bank stocks have been doing really, really good. And we also, along with our gold, so we had. Let me give you a couple more here. Look at our more. Let's see, Goldman Sachs. That's another one of our stocks. Look how that just broke out. But in the bank stocks and the metals, silver, gold, that's where our big profits have been this year. And I told everybody that last January, a year ago. Now, the other thing that's important if you're a trader to understand too, okay, is that the Federal Reserve just doesn't sit around at lower rates, okay? And even though Trump makes it sound like it's the easiest job in the world, it's not, because the Federal Reserve, it has a lot of duties, and the one thing they have to do is keep, maintenance going of the economy, because the economy doesn't do well. Because the economy every day, remember, they're lacking about what I think they're lacking about $16 trillion a day. They're short. They don't bring enough tax revenue in. So what they do, and the other thing you should always, as a trader, be looking at is, how solvent are these banks? And also, is the Federal Reserve purchasing T-bills? And you hope they are, because they purchase T-bills. Remember, the money market funds, that's the pillar of solvency. That's when you know if there's going to be a problem and the market's going to crash, just look at the money market funds. Are they strong? And the Federal Reserve, remember, tries to keep them very strong, okay? And they buy T-bills. The Federal Reserve will purchase T-bills, okay? And the money market funds, when, again, without money market funds, we would be totally screwed. But the government, banks, corporations, they only remain solvent only because of the money market funds. If you remember that, that's going to help you be a good trader because you're going to be watching that. And the government, because they have to cover 16 trillion in a deficit every day, they will turn around and sell T-bills. Okay, they'll sell T-bills. So that covers that 16 trillion, okay? That's how they cover that. When banks are weak, banks are in trouble. We check and see if they're selling CDs, for example. If they're selling a lot of CDs, then we know that they're going to hold that bank up, the bank's going to be okay. Corporations will sell commercial paper. Now, this is all being sold to money market funds, okay? So that's how your government, your banks, your corporations stay alive, make sure they're solvent. If it wasn't for the money market funds, they have a place to go, like a corporation in deep trouble, they need money, they just go over to the money, sell them commercial paper, the money market funds. What a great thing, right? Banks, they're in trouble. The reserves are down. And by the way, banks used to have $40 million in reserve. You don't have to have anything in reserves anymore. That was all changed. But they still have to have reserves. I mean, it's just smart. So banks, when the reserves get low, what do? They'll sell CDs to the money market funds. And the government sells T-bills. So those are the things going in 2026, if you're a trader, that you should look into. This whole thing about buy, and it's a hot stock, and here's a great tip, it's a bunch of BS. It's all about, turn everything off. You don't need to listen to CNBC. You don't need to listen to Fox News, Fox Financial News, or any of those, because you're not going to be a good trader. Listen to noise. You're going to be a good trader when you understand how the system works. And one of the biggest, and I'll say it again, I know I keep repeating it, but it's so important. More people lose money in the stock market. 93% of retail people lose money in the market because they hear that term, and they do this on purpose. Boy, gangbuster year, giant earnings. And you go, I bet, what stock is that? What stock did they say on TV that, I'm going to mark it down. I better go buy it. Because in your mind, you're thinking, boy, that stock's going up so fast. I got to get in that to make some real money. But understand, that's BS. The stock's not going up. Many times, they'll say about a stock and doesn't even move. So be very careful with that, because that's where most of the money is lost, chasing. The FOMOs do that all the time. The minute they hear a certain stock is strong, solid earnings, they jump in and buy it no matter where the price is, thinking, I better get in now because it's already up 20%. I want to get in before it goes up 80%. That's not going to happen. That's not what pushes the stock up, okay? And it's a terrible thing they do that, though, when you think about it, isn't it? And again, the bank reserves, that's very important because, again, the national debt, think about the national debt, it's $38 trillion. So the larger it gets, the higher yields increase. That's what you have to look at, yields. The beautiful thing about the bond market, it always tells you, when you say, ask the, what do you think the market's going to do? Well, you're going to know what the market's going to do. The bond market will always tell you when yields are going higher. There's so many neat little things that make you such a better trader if you think about it. We'll help you with them. So that's about it for today. So don't be misled. Follow the money, not the noise. philsgang.com, free for 10 days.
With your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's